Thanks for listening to this best of Financial Issues.
Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Wonderful to be here with you all. Seth Udinsky, Samuel Case, and your host, Mark Manila. Mark, good morning, brother. Good to have you.
Good morning. How are you?
I'm feeling great, man. I'm ready for another show. I'm ready for these phone lines to light up. It's going to be fun.
We just want to see them just light up, right?
That's right.
Yeah.
Now, now's the perfect time to do it, by the way, Mark, because folks have a whole hour to call in. So call in right now. Why wait?
Yeah, absolutely.
Phone number 610-363-1110. Mark, I'm looking forward to today's show. Again, if you want to join the live conversation, 610-363-1110. We're going to have Matt Armstrong of Crossroads Kids Club joining us later, Mark. I'm excited for that. But first and foremost, Mark, we're going through this crash course for the new year, this investor crash course here. And some interesting stuff. Sam, it looks like we had a survey out highlighting investor risk appetite. What can you tell us about this?
Well, this is our whole question today, is what kind of investor are you? And in order to kick off this conversation, let's get a lay of the land of what most investors consider themselves. So 46% of investors identify as moderate, somewhere in between conservative and aggressive. 37% identify as conservative, and only 16% say they're aggressive investors. However, 3/4 of all investors said they prefer safety over performance.
Interesting. So, Mark, how do we determine the kind of investor that we are?
That's a great question, actually. And it's a very important question. I think that's one of the questions few people ask themselves. And they need to ask themselves because it has as much to do with who you are as it does for the goals. Because it doesn't matter who you are or what your risk tolerance is if you don't know if it's not aligning with your goals. For example, I once had a gentleman ask me or come to me, and we were talking about his job, and he wasn't making enough money just to maintain their modest lifestyle, very modest lifestyle, actually. But he kept saying he had a good job. And I had to have him explain to me what made it good. Well, what made it good was it was comfortable. He was happy with it, all these different kind of things, but it didn't pay the bills. So I asked him, well, wouldn't a good job pay the bills? And he said, well, absolutely. I said, so maybe this is just a stepping stone to you finding a job with all those benefits that you're talking about, but also the benefit of making enough money to pay the bills. And you're saying, how does this relate to how I am as an investor? Well, there's multiple things that define the type of investors, and one of them is understanding your goals. What is the money for? Saying that, creating a plan or determining, well, I'm a very conservative investor, and having a goal that requires you to have an aggressive portfolio doesn't match up. So that wouldn't be the type of investor you are. That's the type of investor you want to be, is very conservative, but your goals aren't giving it to you at that point. So how do you determine what kind of investor or the type of investor you are, whether it's growth in income, or what we call the Sam syndrome here, where you invest in anything that looks like it might go up like a skyrocket, that kind of
it's called the winning syndrome.
The winning syndrome, yeah. Right.
We got to put some action in our lives, right?
Yeah, until it doesn't.
That's part of the action, though.
So really, you need to start with your purpose, not the performance. Start with your purpose. What is the money for? Is it retirement income, growth for the future, college education, or is it for something shorter term, like buying a house, down payment for a house or something like that? So when you figure out what the money's for, that'll help you determine when will you need it, the time horizon. And that matters more than the markets, the type of market that you're going to go into at this time, when you're going to need it. So because that, as you've seen before in our earlier Christian Investor Crash Course, if you know if you know your time horizon, then you can pick the right type of account and those kind of things. So what's the money for? When will I need it? And then we go on to understanding the basic 3 core investor profiles. And most people aren't one of these. They're a blend. And that's where I think it gets confusing to a lot of people. You know, people usually don't wake up and say, I'm a long-term appreciation type of investor, or I have a long-term horizon, or I have short-term. The horizons are set by the goals. So that's what we have to do. So a growth investor, though, to determine what kind of investor you are, you take your horizons and you dump them into there, and then you take your sleep factor and dump them into there, and that mix will tell you whether this matches for you. So you'd either match it up to growth, income investor, or growth and income, or you could get aggressive. Aggressive is just a growth portfolio, that the style of investing you do in it. So let's look at the different areas. Growth investor. Goal, long-term appreciation. Typically, it would be for somebody younger or with a long-term horizon. Somebody who's comfortable with volatility, meaning that their sleep factor is there. They can sleep at night if the market goes up 10 or down 10% at night, or 20%. They're not gonna, oh no, my life has ended, and the old climb out on the 4th story window ledge or something, And it focuses on companies that are reinvesting profits for growth, primarily for growth. Not so much for dividends, though they may pay a little dividend, but they're putting the money, their profits, back into the company to create a bigger and bigger company. And as such, hopefully the price of the company increases as its assets and revenues do too. So that's a growth investor. The other side of the coin is an income investor. And generally, somebody who wants to invest in this needs reliable cash flow. They're at the point they're no longer creating wealth, but they're utilizing a bucket of wealth to keep their lifestyle going. Often, this is a retired or nearing retirement type of person. This type of investor prefers stability and predictability, and they would invest in vehicles that are using their profits to pay dividends, along with a low growth maybe, pay interest, and do distributions so that they have an income. And usually this person is less tolerant with the drawdowns of a very volatile market. So they're trying to make the roller coaster ride a little less volatile, take some of the bottoms and tops off of it by investing in more steadier stocks. So their sleep factor leans more to the conservative end. And then there's the in-between, the growth and income investor. The goal is balance. They see that they're getting near their goals and they want to preserve and to minimize risk exposure. They want income and appreciation. And, this is more like a common midlife or somebody approaching retirement. Maybe they have 5 or so years before retirement. And they seek that smoother ride on the market cycles, that market roller coaster. So none of these are more biblical than others. That's the bottom line on it. It looks at it. We look at these as different seasons of an investor's life. I hope that makes sense to you. So this is where we come back to the sleep factor again. Be honest about your emotional risk tolerance. This is where many investors get tripped up. Ask yourself, and one way to do that is to just ask yourself, how did I feel during the last market downturn? Did it interrupt my sleep? Did it cause me some anxiety? Did it cause me to be concerned about my future? Was I tempted to panic sell or to panic buy? If volatility causes anxiety, your portfolio may be mismatched. That may be the one thing you're missing. Sometimes it's not prudence, and sometimes it's not greed or pride that's causing the anxiety. Sometimes it's because God might be talking to you and saying, hey, let's review your portfolio and get it in a little better shape for the season of your life that you're in. Peace is such an important factor in everything. If you're not finding peace in your investments, something is off. And it could be as extreme as God doesn't want you to invest in, but most likely it's more that you don't have your portfolio aligned with where God wants you right now and the season that you're in. That's why we have multiple asset allocation models for you. So match your investor type to your cash flow reality. That's really important. Do I need this portfolio to pay me now or later? And that will help you get closer to the income or the growth portfolio. Bottom line, 4 diagnostic questions every investor must answer. What is this money for? Retirement, giving, legacy, so on. When will I need it? Time horizon. How do I respond emotionally to market decline? And do I need this portfolio to produce income today? If you can answer those questions, you'll find yourself determining what type of investor you truly are. And instead of reacting and acting, you'll stop reacting and start stewarding it. And that's what this is all about.
My wife and I, we moved into this neighborhood. We had some experience with Crossroads Kids Club. We had served at another club. We kind of thought to ourselves, like, it would be really, really cool for us to actually bring in a club that was able to share the love of Jesus with kids directly into the school. And so we started our Crossroads at Hilltop.
Crossroads is amazing. You can learn all kinds of things about God. That He loves all of us. He died on the cross to pay for our sins. That He will help me in every way.
There is just such tremendous opportunity to reach kids in some of these areas that just aren't being reached.
Sometimes I pray every night. When I feel alone sometimes, God is right there sitting next to me. I can rely on Him no matter what happens.
Help reach kids with the hope of the gospel. Visit reachourschools.com.
I will end the government policy of trying to socially engineer race and gender.
Diversity, equity, inclusion. Hiring on the basis of race and gender. You don't see the problem here?
What was once a widely practiced program is now being abandoned at an incredible rate.
We will forge a society that is colorblind and merit-based.
Companies are making big changes. Money talks, so why not have it advocate for what you believe in? Get started today at financialissues.org.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Thanks for listening to this Best of Financial Issues.
Folks, today's show brought to you in part by our friends at Samaritan Ministries. Check them out at SamaritanMinistries.org. We so appreciate the work that they do, and being able to be members with Samaritan really is an amazing thing. Hey, Mark, Dave, we see you guys in the queue. Just hang in there. We'll get right to you. We got a line open, folks, so you can fill it right now, 610-363-1110. But, Mark, at this moment, I want to get back on that crash course with you, the investor crash course for the new year. Course, yeah. The question for today, Mark, is how do I, as a Christian, deal with my 401k, and understanding that a lot of 401ks do not offer biblically responsible options? What do we do with this?
Yeah, that's a great question. Actually, it's a wonderful question. And there's so many neat things that have occurred over the last 15, 20 years. You know, 401ks used to be 401ks. They were very boring. You had maybe 4 to 40 different options. Now they open it up to brokerage accounts. They open it up to have a Roth option. And that's the most important part. If your 401k has a Roth option, you should start with the Roth option inside your 401k, if available. Fund that portion first because it provides tax-free. The term here that I really like is free. It doesn't defer the taxes to the future when you're retired and you're no longer producing income. It's tax-free when you get to the future and you're retired and you can take the money out. So effectively, your money is worth more because it's all yours. Tax-free growth and future tax certainty. That's the thing I like there too. We know that you have money and you know what that money's costing you, nothing. So that's good. So the first step in maximizing a 401k is if you're contributing or if you want to contribute, see if they have a Roth option and get it inside that right away. The other thing is, how do you determine how much to put in a 401k? Well, I always say capture the full employer match. For example, if your employer says, we'll match 100% of the first 3% you put in, I'd go up to the 3% and then stop there. The employer match is part of your compensation. It's an immediate risk-free return. Think about this. If you put, let's say you're making $100,000, so 1% would be $1,000. You put $1,000 in your 401k and they match that, you've just made 100% return day one. And I did a quick calculation for our show yesterday and on the different types of accounts, and I showed even if you had no BRI options and you just put it in the money market there in your 401k and you went and you did $1,000 a year with 100% match, what would happen is after 10 years, you would have averaged a 16.9% or 16 point something percent return on your investments for sitting in a money market and at a nominal rate in that because of the match. So even doing nothing, not even being invested, being in one of the safest avenues in a money market, you would have made 16%. So go up to the match and then stop there. Well, why stop there? Because there's other areas you can fund. For example, if you go up to your match and you still have, God has still given you froth beyond your needs. Well, if the income allows, fund your personal Roth IRA next to the max. That way, you have your personal Roth, which probably has better flexibility and control in the investments, and it's easier to align with your biblical responsible investing. And it's just another way of building long-term tax-free. Did I say that enough? Tax-free wealth. Then consider after that. You might want to consider your additional 401k. Contributions being into the traditional side if you still have even more froth. And it may help you to get a little tax deduction if you're in a really high tax bracket. So let's address the elephant in the room on this, and that's apply Christian stewardships to it. A lot of 401ks do not give you the option to invest in biblically responsible funds or give you a brokerage window where you could go pick individual stocks or things like that. If they don't, they generally have a money market. So you still could fund it up to the match, still make a good return because of the 100% match, hopefully, that they're giving you. So that would still be good. And you're still able to take advantage of the tax-free or tax deferral of that. If they do have options, more power to you. So I would say that the bottom line is start with the Roth, then go to the Roth, the person Roth, then go back to the traditional on it, and avoid investing in anything that obviously compromises God's tenets of love. And then also, one last thing on this is that I have seen over my years as an advisor to many, many people, occasionally people come in and their credit cards will be really ran up, and we'll discuss that and how it's affecting them and the interest they're paying and all that. And then realize that they're contributing to the max on their 401k in fear of their future. But meanwhile, they're selling out their current lifestyle and they're living at a third of what they could because of the interest on all their debt and everything. So if you're running up credit cards and contributing to your 401k simultaneously, you have to consider, should that money be going to maintain the lifestyle we have until we get our lifestyle under control or not? Things like that. You want to avoid contributing to something at the expense of your giving you don't want to ever compromise being a conduit of God's blessings. That's one of the reasons for what he entrusts to you. So you want to make sure that you're taking care of your family, that there's peace, and that you're giving, and then you can go into the 401k. And the goal is to prepare faithfully, not just maximize accumulation. Bottom line.
Mark, that's fantastic. So it seems to me that no matter what your options are, even if your company does not offer, like you said, if there's no biblically responsible options, they should be able to still offer a money market option, and that would be a good answer for the Christian who wants to invest biblically responsibly.
Absolutely. Yeah. If there's a match, it's a great idea, because that match just automatically gives you an immediate return, which even if you amortize that one-time $1,000, it will, you'll see that your return is worthwhile, even over a 10-year period in a money market. So
hard to beat free money.
Yeah, absolutely.
Free money. Yeah.
That's good. That's good. Well, Mark, thank you for that. That's awesome. If you got questions about it, folks, give us a call, 610-363-1110. Speaking of keeping your portfolio biblically responsible, Mark, we issued a sell alert yesterday, and we actually got a question in relation to it. So Gary is saying that he did some research on OPRA, OPRA, and it seems like it's majority owned by the Chinese, partnered with Google. What do we make of this, Mark?
I'd say good catch, Gary. Appreciate you doing that. Since I've come on board, we started a process of reviewing everything. Every week we look at everything on the buy list, and we look at different sectors from a different perspective. We rescreen everything, and that's down. I actually did not catch that on OPRA yet, but we just put OPRA, OPRA, on our deep dive list, along with 4 others for this week for us to go into. And your question, your comment came up just after we put it on the list to do a deep dive. So I think you got something there, Gary. OPRA is a controlled company with the majority voting power tied to a Chinese-based company. And that means that the Chinese are involved in running OPRA. Now, maybe their influence isn't as great as if it was domiciled in China, but that doesn't make any difference to me. If a company is owned by a Chinese company, and that Chinese company owns over 51%, they control the company. They control OPRA. Their influence controls the direction, what they do in the software, what they do in their browsers and their games. They control all that and how they use it and what's embedded in there. I'm uncomfortable with being a partner with a company that is that hates God and is communistic. Bottom line. So, with that said, Gary, and with the deep dive that we did that backs up what you said, we have immediately put OPRA, OPRA, on the sell list. And I think it's a good call. First of all, I wasn't very impressed with OPRA anyway from the very beginning since I've been on board with their performance or anything else or their direction. And secondly, we don't need to partner with a company that has China government involved in that company that owns the controlling interest in a company that we own. So we're moving on. Now, I would like to bring out a little difference here. If it was an individual, like it was a Chinese individual or somebody who was born in China or something like that, I'd be looking at this differently, because in China, any corporation in China that is incorporated in China has the Chinese government as a partner in it. They are on the board of directors. My understanding is they have that deep of influence, and they're being watched and they're being controlled to make sure they're in line with China's goals, not American goals, not godly goals or anything else. But an individual does not have that same pressure. Yes, if they're Chinese and they're living in China, they have the pressure of the government. I mean, they could come in and say, what are you doing in this company? And we want to use you. But it's not the same thing. I think there's another company we have on our buy list that actually were started by 2 Chinese guys, but they live in America. And by the way, they became U.S. citizens. We're not going to put them on the sell list. It's not the same influence, and it's not the same type of partnership. So good catch, Gary. Appreciate you and appreciate all our partners. Thank you for being on top of things.
It's great. You know, Mark, I'm glad that you mentioned that, addressing the elephant in the room for anyone who might accuse us of this. We are not racists, okay? Just because a Chinese person owns a company, that doesn't mean that we're going to sell them. But like you said, Mark, when you have something like this, that it seems like there's government influence there, we have to take a second look. We really do.
Just because somebody has a C in their name or their facial looks a little different, we're not going to sell a stock or judge a stock on that. We're judging it because, very clear, a Chinese company owns controlling interests in OPRA. We don't want to partner with that. We're out.
Well said, Mark. It's really good. 610-363-1110. Guys in the call queue, we'll get to you right on the other side of this break. We appreciate you all listening.
First thing.
Yes, first thing coming back. We're going to get to you guys. Fill up those phone lines at 610-363-1110. I hope you all did see that sell alert. We sent it out yesterday. I just got the text alert on my phone a little bit before the show as well, so hopefully you got that also. If you have to leave us, folks, hope you have a great rest of the day. We hope that you'll stick around with us, though, for the remainder of the show. Lots to get to, including your calls on financial issues. If your interest is piqued and you want to become a partner, today's a great day to do it. Just go to financialissues.org and click that Become a Partner button. We'll see you on the other side of this break. More to come after this.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial portion of a need, medical needs are complex and include the physical, mental, emotional, and spiritual aspects as well. While the financial gift is important, if we stop there, we miss an opportunity to minister to the whole need of our brother or sister. When you faithfully pray and send a note of encouragement and scripture along with your share, those words become a vessel of God's continued healing and blessing on the receiver. And the impact it has is immeasurable, bringing glory to God and provision and unity to His church. Glorify God with your health care. Send a note this month.
Did you know that an unborn baby's heart beats at an average of 120 times every minute? That steady rhythm, that precious sound, that's the sound of life. Preborn partners with local pregnancy clinics across the nation to help mothers choose life, providing free ultrasounds, counseling, and the gospel of Jesus Christ. When an abortion-minded mother hears that sound, 80% of the time, they choose life. For $28, you can sponsor a life-saving ultrasound and share the hope of the gospel with a mother facing an unplanned pregnancy. Hi, I'm Mark Manella, host of Financial Issues, and today I want to encourage you to give to the amazing work of Preborn. To give, just dial pound 250 and say the keyword baby. That's pound 250 baby.
Navigating through investment options can be challenging, especially when you're determined to uphold your God-given values. Every dollar you invest is a vote for the world that you want to live in. Let your values guide your investment decisions and help to shape the culture in which we live. Become a beacon of light and pave the way with biblically responsible investing. Timothy Plan, where faith and finance collide. Before investing, carefully consider the fund's investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
Thanks for listening to this Best of Financial Issues.
Give us a call, folks. 610-363 1110. We want to get to your questions, and it's great to get some calls now. We miss you all over the Christmas break, so good to be back here with you. Mark, we have a call coming in from Frank. It's interesting because I think by the description of Frank's call, we're answering a question that we got from a listener named Pat as well, one of our partners, asking about silver. But why don't we go to Frank, shall we?
Okay. Hey, Frank, how are you doing? Welcome to the show.
Well, thank you, and Happy New Year to everybody.
Well, thank you. You too.
I got a question about the silver, the ETFs. I bought several shares of the MA55, which I guess Shannon's the one that put on the buy list, and now that's not on the buy list anymore, and the other one, 15, is on the buy list, and I just wondered, how you feel about both of them. And should the one I've got has gone up. It's doubled in price since I've had it. And but
we can't let that happen. That's making you too much money. You're going to get prideful, and you're going to start following the glitter. I'm sorry.
But I was wondering about the other one. I want to put some money into my son's Roth, and so I figured that would be a good one to do. But I just would like your opinion on it in comparison to the two and so forth.
Okay. Well, there is a big difference between the two. One of them is not physical gold. One of them is actually commodity. They're using commodities to track the price of silver. I'm sorry, not gold, silver. Aberdeen, what is it, MA55, they're actually tracking the NAV, and they track it very close by using commodities. The Sprott Physical Silver Trust is actually physical silver. That when they actually buy bullion and they store it, and the more people that invest in this, the more silver they hold. And when people sell out of it, when it becomes time that they need to hit it, they'll sell some off. So one of them is physical silver. I know the Aberdeen standard, the MA55, they say physical silver shares ETF, but they're really not physical. They're just tracking the physical. Does that make sense? And it's a lot different. The difference is holding physical silver compared to commodities tracking the price. And normally those two are very close. And actually, one of the things we found out just recently is that normally the commodities have less expenses in them because, it costs money to buy silver, to transfer it, to store it, all that kind of stuff. So it seems like that the physical gold wouldn't perform as well as the commodity price. However, recently we saw a divergence from that, and we're seeing physical silver actually outperforming the commodity price. And there's a whole lot to do with that, and there's a whole lot of background. Some of it's conspiracy theory, some of it is seriously worth looking at. And we're going to be looking at that. I think that's on the 22nd or somewhere later on in the month to bring this up about what's going on in the precious metals, specifically the silver market. So it's good you brought that up. So that's the difference between the two. Do I think you should put it in an account? Sure. I think every account should have a little bit of allocation into precious metals. I personally lean towards the true physical storage. And Sprott Physical Silver Trust is the one that I use with silver because they are audited and they're highly trusted for truly having the silver there to back the ETF investments. That doesn't mean the commodity. Yeah, it wouldn't hurt at all to have both, actually. I just wouldn't become a silver bug or a gold bug at any point. The reality is, you've heard me say this before. A lot of people buy into precious metals to protect themselves from inflation. It is a protective product, but it's not a safe product. The swings within gold are higher and wider and deeper than they are in the stock market. When gold crashes, it crashes. Silver does the same things, and commodities can be manipulated. So we got to be careful about that. Just remember, they're not safe, but long term they do help to offset the impact of inflation on your portfolio.
Okay. Well, but do you recommend that I sell the other one, or not?
Oh no, there's no reason to at this point. No.
Okay.
No.
All right. Well, that really helps. That you really enlightened me. It's because I thought the other one was actual silver too.
I know. I just don't understand why they call it the standard physical silver shares instead of calling it the standard silver commodity shares. But that's maybe that wouldn't go over as good. I guess they're saying they're tracking the physical price, but that's the way it is. I mean, yeah.
Well, I sure thank you.
Thank you. It's a good question, actually. And actually, you're right. You're right. I think there was another question on this, wasn't there?
Yeah, it was. Frank, we appreciate you so much, brother. Pat, who's 73, Mark, was asking the exact same question. So, Pat, I think you got that answered. But Pat did have a follow-up also, Mark, that has to do with this.
It was an expansion on it, on the energy transition materials, the MA29, I think it is, for the partners. That's something we put on the buy list recently to expand the ability to be able to invest in those metals and resources that are required for all the new technology, the AI, the servers, all the, the lithium, the nickel, the cobalt, graphite, and all the rare earth materials and elements that are needed for all the new technology. What was her question specifically on that?
So it was asking about what you said, Mark, MA29. It's characterized as a material, not a commodity, even though it holds metals. And so she was just wondering kind of why that is. And then also wondering, do you recommend that long-term investors also hold MA29?
Both those questions are great. One of the reasons we put certain items in certain sectors is to help with the asset allocation models. Maybe it is a material, but it's also a precious metal, and it can be a commodity. There's so many ways to pull this all together. But the reality is we classify it one way or another to help with the asset allocation, so that if we just put it into materials, then you might buy it in way too much of it in different sectors of your asset allocation model when we want it to stay a certain amount in a certain sector. That's the only reason. It's there to help with the asset allocations on it. What was the second part of her question on that?
Yeah, so the second part was just wondering, are you recommending that long-term investors hold MA29? I would assume
absolutely.
Yes.
I see it as being that's why we put it on there, because we're seeing these rare earth elements are very important, and obviously it's hard to invest in them in a safe way. Here's a way to do it. We have an ETF that makes it possible to get into them. Lithium, and trying to buy commodities in lithium or copper. You can do copper because there's a lot of ETFs on there. But this just pulls them all together and make it easy for you to invest in those foundational materials, elements, precious metals that are needed for the new economy that is based on technology. So, I think it's a long-term hold at this point. A long-term buy, I mean.
Yeah, very good.
Now, Mark, just to add to this whole conversation about silver, we also have a silver miner on the buy list as well. So what would the pros and cons of owning
he's a miner. He can't drink. No.
Mark, this is why we brought you on. Is just for
okay. I'm sure. As a miner, miners are those who are extracting the ores, the materials from the earth. They're different than the actual metal themselves. They have different risks. They have different potential. But what you'll find primarily is like silver miners and gold miners, they will actually kind of mirror the movement of gold. When gold goes up, of course, they're they go up in price because their earnings can go up in price because of the profits that they make on it. So that'll affect it. But then they also have their own risks, such as, a mine collapsing or a strike by the union or, a country being taken over by some kind of a guy who thinks he's going to rule the world. And no, I'm not talking about Trump. I'm talking about Maduro here, who destroyed the oil over there. Trump's going to ride it.
I thought you were talking about Tim Walz.
Tim Walz. Yeah, there you go. So yeah, those things do happen, and so there's certain risks with miners you don't have in the commodities themselves or the metals themselves. So they're different products. That's why we list them differently.
So it wouldn't be redundant
investing in a company.
It wouldn't be redundant to own both.
No, it would not be redundant. It may be overlapping, maybe 50 to 70%, but it's not totally redundant. No. Some miners can do better than the actual metals themselves. Like when somebody strikes a new line or a new mine or something like that. So they can do better. These are all great questions. I'm so glad we got such smart partners that call in and help us. The number here is 636-310. No, I got it all wrong. Without Seth,
Mark,
I couldn't
got you.
do this.
610-363-1110. 610-363-1110. We'll be right back, folks, after this. Join us.
I remember my life before I met Jesus. I was most of the time afraid. I remember one of my teachers gave the classroom an invitation for Crossroads. When they talked to me about the love of God, I felt a sort of peace in my heart. I will commit myself to learn more about God's Word, to be able to share the gospel to others.
To help reach more kids like Louise with the life-changing hope of the gospel, visit reachOurSchools.com.
As a member of Samaritan Ministries, your monthly share is a gift that goes directly to a real person in need. While that share takes care of the financial portion of a need, medical needs are complex and include the physical, mental, emotional, and spiritual aspects as well. While the financial gift is important, if we stop there, we miss an opportunity to minister to the whole need of our brother or sister. When you faithfully pray and send a note of encouragement and scripture along with your share, those words become a vessel of God's continued healing and blessing on the receiver. And the impact it has is immeasurable, bringing glory to God and provision and unity to His church. Glorify God with your health care. Send a note this month.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Thanks for listening to this Best of Financial Issues.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Well, folks, we got a full board, so keep trying. 610-363-1110. Someone will drop. We'll get to someone. We'll try to knock out all these calls in this segment here. So give us a call, 610-363-1110. Mark, let's get to Stephen, shall we? Stephen is calling from Texas. Good morning, Stephen.
Hello, Stephen.
Yeah, can you hear me?
Yes, there you are. Okay, good. What's on your mind?
Okay. Well, first off, you knew who I was because of my number, but I need to inform you, I'm now Stephen from Iowa, not Stephen from Texas anymore.
Nice. Moving north, Stephen. You tricked us there.
Okay, but I just want to know, did you move or did they move you out?
Yes.
There you go.
Yeah, it was beautiful.
They ran you out of Texas.
Yeah, I picked the right time of year to do it. Okay, serious question. And I'm a little surprised I haven't heard more about this, but what do you think is going to be the effect of the change of authority in Venezuela on the stock market, particularly energy stocks? But I'm willing to take an answer for all of the above.
On my end, Seth, it got real dirty. I couldn't hear the question.
Yeah,
Can you help me
Stephen,
with this?
we're going to put you on hold there, brother. So, Mark, Steve is wondering, with everything that's happening in Venezuela, what will this do to the markets that might be affected by this? Particularly, we're talking oil companies, oil stock. What do you think might happen as a result of all this? And I think, Stephen, if I'm correct, this is kind of regarding, Mark, what we talked about in the beginning part of the show with how, the markets have really not been that concerned despite everything that's been happening down there. What do you think?
No, actually, it has given a little boost to some of the oil companies, mostly the processing. Those companies that are built for processing crude oil. A lot of people, what I've read is Venezuelan oil is what is considered dirty oil. It's not like sweet crude in Texas, whatever. It takes a lot of processing to get it into the products that are used around the world, like gasoline and diesel and whatnot. So
Mark, it takes. I guess that's what you get with communist oil, right? It's going to be dirty. No, I'm just kidding.
My goodness. Yeah. No, but so those companies that have processing plants and have the knowledge in that are looking to be able to get involved in rebuilding and getting that done over there. We also have the mid-tier where the transportation areas of tankers and pipelines and stuff like that, they're going to be boosted. They could be boosted by it. So there's a lot of positive things that could come out of it. We also could see the price of oil be affected by it. And I think that's a downward trend over the next couple of years, not only because of that, but other things. But maybe that could affect some drillers and others in a negative way, because when the price of oil gets down below a certain point, it costs more to get it out of the ground than you can sell it for. So it may stifle drillers from actually putting some new holes in the ground there to bring it out. And that's okay, because we got enough holes in the ground, it sounds like, and enough going in that if it doesn't, we'll still have the quantity of oil we need to keep gas and transportation and all the things we use our petroleum products for, bring the price down on them anyway. So it is going to affect the world. It is going to affect the economics, because petroleum affects everything. It doesn't matter what product you're thinking of, it affects it. If you're thinking about technology, guess what? It takes transportation. It takes energy to run the factories to make microchips. It takes energy to do, energy affects everything, bottom line. And Trump nailed that early on, and he wants to bring those prices down, so he will. But yeah, I think the oil industry, the energy industry will be affected, with some it affected in very positive ways and some not so much.
Stephen, it's a great question, brother.
Just need to be discerning on what energy companies or what type of companies you're looking at to invest in with those.
Awesome, Mark. Let's get to Scott. Scott is calling from Georgia.
All righty. Good morning, Scott. Welcome to the show. What's on your mind?
Hey, good morning. Morning, Mark. Haven't talked to you, so welcome to the program here. Excited to have you in the leadership role. So go Blues, by the way.
You're the man. Nobody said that on the show ever yet. Thank you. Who are the Blues?
I'm kidding. I'm kidding.
This from a guy who has an Eagle pillowcase.
That's right. Hey, I got a lot out of yesterday's program. I don't get a chance to listen every day, but yesterday I did. And Seth, thanks for receiving my email and responding so quickly.
Got it, Scott.
I just really wanted to put a bug in your all's ears. I don't anticipate that you've yet talked about that, but hopefully on tomorrow's partner call, this can be at least a conversation started. I do a yearly reallocation or rebalancing of the portfolio. And I've only been a partner for a couple of years. And so moving from a non-BRI investments to BRI has been a a 2+ year process. I'm still not done. I mean, things like REITs and preferreds and financials had almost no investments in, so moving real slowly. Shanna as well last year, kind of said, hey, either tap the brakes or put on the brakes, and that's kind of really slowed down the process of rebalancing or just continuously moving assets into BRI vehicles. But I'm curious if you as an organization do a rebalancing. When would asset allocation models be refreshed and updated? I know a couple times in the past I've been kind of caught flat-footed as I was buying in to assets that then went on BRI, and there was even yesterday, right? I'm looking at a new one, and then it's like, oh,
we don't want to talk about that.
No, I'm not busting anybody's chops, but it's just kind of like anything that y'all can do to give me more bandwidth and view, it'd be helpful. So
I appreciate that. No, Scott, that's good insights. 2 years, I don't have any problems with it taking 2 years to convert to BRI. Outside of during that 2 years, you are wading in the swamp of ugliness and evil. Bottom line, you are still partnering there. I've had just like many people, our journey is a little different. I've had people I know people who have come to Christ and immediately their life changed overnight. They sold the stuff that was calling them to do evil things. Like I knew a musician who sold all his music equipment that he really coveted, and he loved being a star on stage and stuff, and he got rid of everything and walked away from it overnight. And I've known others that played in the bars for years upon years upon years till they realized what they were doing and what kind of songs they were singing and how they were helping program people to sin instead of come closer to Christ. So the same thing's true with moving down the road of investing with biblical integrity. Some people immediately go, ooh, I can't be here anymore. This is so ugly. I don't want to partner with abortion, pornography. I don't want to be part of that in any way. I don't want to be part of encouraging young people to get sexually crazy. I don't want to do this anymore. I don't want to partner with companies that have addictive products that are destroying lives. I want to move on. And so they just sell everything and they move at any expense. That's cool. Other people do it systematically, and that's cool too, because it's wherever God has you. I lean more towards the first, but I also, we all have our different way to do things. As far as rebalancing, a calendar once a year is okay. There's nothing wrong with that. I think it's good to review your portfolio. A deep dive once a year is a good idea. Lock in some gains, clean things up, get rid of the dirty, get rid of the sad and the bad returns. Those companies that just have fallen apart. That's okay. Lock in some of the capital gains. Lock in some of the tax harvesting. That's all good. But more importantly, it's to be rebalancing along the way. I call it pruning. I don't know what other people call it, but just like the call we had earlier today, the gentleman was asking, when do we sell this? It's gone up, 600%. When do we sell this? Well, maybe we don't ever sell it. Maybe we prune it back to where it's in our asset allocation and we lock in the gains. We put in $1,000 and it's grown to $7,000. Let's sell $6,000 and lock in those gains on $6,000, and we still have $1,000 into it. And if it continues to grow until you get the hold or sell signal, then that's fine too. So rebalancing can take different activities or different cues. One of the cues is when something has grown substantially, you should consider pruning it back and entrusting that God would prefer his money be managed prudently and not trying to gamble it to try and time the top or time the bottom. That's the bottom line. So, yeah, reviewing it, you might find things that have grown immensely, or you might find things that are dirty, and you can move at those times. Those are always a time to rebalance when they go on the BRI watch or a BRI sell list. That's a good time to rebalance your portfolio. And your call is perfect. Thank you for calling in, and thank you for your love for the Lord and your desire to invest with biblical integrity. And thank you for being with us. I look forward to talking to you all tomorrow. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.